during Evening with AK and Friends 2023 on Wednesday. I explained why I was still looking to accumulate the common stocks of DBS, OCBC and UOB. Although net interest margins are likely to plateau in the coming quarters because funding costs have finally caught up, our local lenders are still very profitable businesses. I also explained why we should not just look at the bank's dividend yield. We should also be looking at the earnings yields. So, for example, OCBC is committed to a payout ratio of 50%, which gives a dividend yield of about roughly 6.6%. They retain the remaining 50%. This is retained earnings. The earnings yield is actually in excess of 13%. This should be very attractive to any value investor. Most definitely. It should be very attractive to any investor for income. Amongst the three Singapore banks, I said that OCBC had the cheapest valuation based on price to book value. I said DBS was the most dearly priced because it has always led the pack in terms of return on equity. As for UOB, I said it transformed from a boring bank to one with an exciting growth story after it purchased Citibank's consumer business in 4 Southeast Asian countries. It became really obvious when the banks reported Q1 2023 results that UOB would be leading the pack in 2023 as its earnings jumped 67%. DBS saw a jump of 43% while OCBC saw a jump of 39%. So, which bank would I increase exposure to next? As an investor for income, I like OCBC. However, I am also attracted to UOB's growth story, but without paying the kind of premium DBS commands. Although UOB expects only low to mid-single-digit percentage growth in loans in 2023, they expect double-digit growth in fees. UOB also saw a commendable recovery in its Common Equity Tier 1 capital ratio, which declined after its purchase of Citibank's consumer businesses in 4 Southeast Asian countries. If I wasn't invested already, I would buy some now because current prices are not expensive. However, as market sentiment seems to be rather cautious, it would not be a good idea to throw in everything, including the kitchen sink. OCBC should see immediate support at $12, and if it does not hold, there should be some support at $11.50 a share. If that breaks, then we could see $11 to $10.70 a share next. Immediate support for UOB at $28 a share has fractured and it doesn't look like it could be regained. Next support is at $27, but this could be weak. Stronger support is at $26 a share, which is a many times tested support going back to the middle 2022. For those who are more interested in getting DBS shares, $30 is roughly where we see support, although if we are to be more precise, it would be at $29.40 a share. I would pace myself in my purchase and keep at least a third of my war chest in reserve in case we see lower prices. Remember that technical analysis is about probability and not certainty. Still, as most of us have limited resources, it is a useful tool to help us pace our purchases. I have a video on how to become a millionaire by investing in Singapore's banks. If you have not watched it yet, you might want to do so. If AK can do it, so can you.